Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries behind every acquisition announcement. And believe me, this one has a few intriguing layers. Now, get ready because we're diving into a report that might just be hinting at a big shakeup in the world of critical resources. This isn't your grandma's dusty old filing. This is about mergers, potential partnerships, and the kind of moves that could really reshape an industry. So grab your decoder rings because we're about to break it all down. Before we dive in, if you find value in these deep dives into corporate filings, do us a favor and hit that subscribe button. And hey, we've got a thriving community over on Discord, linked in the description below, where we chat about all things corporate finance. You should definitely join us. Alright, so what we have here is a Form 8K filing from Plum Accession Corp IV. Think of an 8K as the current report for public companies. It is used for significant events that shareholders should know about right away. And the big news dropped on the 19th of December 2025. Plum Accession Corp IV, which is a special purpose acquisition company, or a SPAC for short, announced that they've inked a non-binding letter of intent for a potential business combination. That is a fancy way of saying they're looking to merge or acquire another company. Plum Accession Corp IV itself is a pretty straightforward entity. It is a special purpose acquisition company, meaning its primary purpose is to raise capital through an IPO with the sole intention of acquiring or merging with an existing company. They exist to essentially find a target company and bring it public through this merger. It is like a blank check company. Interestingly, Plum Accession Corp IV lists its securities, which are units, Class A ordinary shares, and warrants on the Nasdaq Global Market. So this is a publicly traded entity already, and this potential business combination is a significant step for them. These units are pretty standard for SPACs. They typically consist of a share and a fraction of a warrant. This structure allows investors to have immediate equity and the potential for upside if the stock price rises. Now, the core of this filing is the Regulation FD disclosure, which essentially means they're putting out information that could be material to investors. And here is where it gets juicy. Plum Accession Corp IV is looking to combine with American Critical Resources, or ACR. And ACR is a subsidiary of Controlled Thermal Resources Holdings Inc., or CANTR. The critical resources part here is your first major clue about what ACR is all about. This letter of intent is important because it signifies that both parties are serious enough about a potential deal to lay out some terms, but it is not a done deal yet. There are no guarantees, and there is still a lot of due diligence and negotiation to happen. The terms could change, or the deal might not happen at all. This is legal speak for hold your horses. They are explicitly stating that this is not a sure thing. They need to complete their homework, hammer out a final contract, get approvals from their boards and shareholders, and jump through regulatory hoops. The filing also gives investors a heads up about what to expect next. If a final agreement is reached, they'll file a Form S-4 registration statement. This document will be packed with details about the proposed business combination, including financial information, risks, and what shareholders will vote on. They're encouraging people to read these future filings because they'll be crucial for understanding the deal. They also touch on who might be involved in the process of getting shareholder approval. This includes directors, officers, and employees of both companies. It is standard procedure to let people know who is influencing the vote. And now for the really important stuff when it comes to looking ahead, the forward-looking statements. This section is full of legal disclaimers, but what it boils down to is the company's hopes and expectations for the future, with a huge caveat that things might not turn out that way. This is a big one. Plum Accession Corp IV is essentially saying, we're taking ACR at its word for now, but we haven't fully checked it. This highlights the early stage of the deal and the importance of the due diligence phase. They are not yet vouching for the accuracy of ACR's claims. This is standard language to protect the companies from lawsuits. They are saying that their current predictions and forecasts about ACR's business might not match reality. So while they're optimistic, investors should be cautious. This lists some of the major roadblocks, things like another company making a better offer, or if the deal just doesn't work out financially during the due diligence. It is also important to note that even the terms they agreed to in the letter of intent could change significantly in the final contract. This delves into the actual business of ACR, and this is where the critical resources part becomes very clear. They are in the business of things like lithium, and that is a hot commodity right now. But it is also volatile fluctuations in demand and prices, competition, the challenges of developing new projects, raw material sourcing, regulations, environmental concerns, and even global politics can all impact their success. This is a high-risk, potentially high-reward sector. This section just lists the exhibits attached to the report. The most important one here is Exhibit 99.1. This press release is essentially the public announcement of this potential deal. Since the 8K filing itself is quite technical and legalistic, the press release is usually where you'll find the more digestible information for investors. And finally, the signature block. This is where Kanishka Roy, the Chief Executive Officer of Plum Accession Corp, IV, officially signs off on the report, confirming its accuracy to the best of their knowledge. Now, let's talk about what this all means. Plum Accession Corp, IV. A company that exists to find and merge with another company has identified American Critical Resources, ACR, as a potential partner. ACR, a subsidiary of Controlled Thermal Resources Holdings Inc., is involved in critical resources, likely meaning things like minerals essential for modern technology, such as lithium, given the context. The fact that this is a non-binding letter of intent means we are very early in the process. Both companies have agreed in principle to explore a combination, but there is a mountain of work ahead. Due diligence will be critical. Plum needs to thoroughly examine ACR's operations, financials, and future prospects. They need to verify ACR's claims about its business and its critical resources. The information provided by ACR to Plum has not yet been independently verified by Plum. This is a crucial point. The risks highlighted in the forward-looking statements are not minor. They touch upon the inherent volatility of commodity prices, the challenges of resource extraction and development, regulatory hurdles, and even geopolitical instability. These are all very real factors that can make or break a company in the critical resources sector. Plum Accession Corp. IV itself is a SPAC, so its success is entirely tied to finding a good target and ensuring that target is positioned for growth. If this combination with ACR goes through, it will essentially take ACR public, giving it access to capital and a platform for future expansion. Looking at this from a Warren Buffett perspective, we're seeing a lot of potential but also significant unknowns. The critical resources sector, especially lithium, is experiencing massive demand due to the electric vehicle revolution. If ACR has a solid resource, a clear path to extraction, and can manage the complexities of the industry, this could be a very lucrative venture. However, the lack of independent verification by Plum at this stage is a yellow flag. Investors will need to keenly watch the due diligence process and the final terms of any definitive agreement. The biggest strength here is the potential alignment with strong market trends, namely the demand for critical minerals. The weaknesses are the early stage of the deal, the unverified information from ACR, and the inherent volatility and risks of the critical resources industry. A notable opportunity is the potential for significant growth if ACR can successfully bring its resources to market, especially with the backing and public listing that Plum could provide. Conversely, a major risk is the potential for the deal to fall apart during due diligence, or for ACR's projected future performance to not materialize due to the many factors mentioned in the filing. My conclusion is that this filing signals a potentially exciting but very high risk early stage opportunity. Plum Accession Corp. IV is betting on the future of critical resources, and ACR is their chosen vehicle. Investors should proceed with extreme caution and await further developments, especially the results of the due diligence and the terms of any final agreement. Alright, that is our decoder ring session for this report. What are your thoughts on this potential business combination and the critical resources sector? Let us know in the comments below. If you found this analysis helpful, give us a thumbs up and make sure you are subscribed for more. And don't forget to join our Discord community via the link in the description. Thanks for watching, and we'll see you on the next decode.